Hey, what's up guys? Dennis here from the Prime Traders community. I'm just ready to go to the gym. My Adidas is on, but I made a really nice video about trading with probabilities, checking the upside and the downside. It's a short video, just about 5 minutes. I'm really sure you're going to enjoy it and you're going to learn something. The pair we're looking at is AUD CAD. Really nice setup cooking for either a buy or a sell, but as you will see in the video, we haven't made an executive decision yet of what we're gonna do. But something's cooking and we're gonna capitalize on it. Enjoy the video, give us a thumbs up, subscribe to this channel, and we'll make sure that you actually start learning even for free with us. Thanks, and I'll see you soon. Right, so this is how probabilities work. Let's switch off the watch list real quick. We're looking at AUD CAD on the 4-hour chart. Now I'm going to start with the general intelligence on the 4-hour. First of all, we have an important resistance. Oops, let's remove this. Okay, so we got an important resistance right there based on the Dow chain channel, DC, right? That's the first thing. What we had was price action push to this level and come right back down. Then we had the same thing at the breakout. We had the price action use that level as a support. You can see that happening right here. Let me just show this like this, right there. There it is. And then the same thing happened here. We had the basic support, push up, breakout, then retest. Beautiful price action movement. The next thing we have is the 30% being a resistance from this bottom, you see that the 100% is there, to this basic little top. And there's the 30% right there, acting up and using the level as a resistance. Great indications for good selling. So we have resistance and 30%. Generally 30% in our book indicates a good reversal level. But now let's look. So what I'm explaining to you here, very important, as I explained at the beginning of the video, I'm teaching you how to check the upside plus downside and then make your decision. Equals. This is how it works. So we have one reason to sell, resistance, the second reason to sell, 30%. But then we move over to the buying potentials. So this is on the 4-hour. We'll move down to the 1-hour too. The buying potentials are the 13 EMA, this blue level here, and the 50% of the Dow chain channel, the top to the bottom. Both of them acting as a support at the moment. Now, also the 50%. 50% is a pretty important level from top to bottom, again at the same exact level. So 3 basic support levels right there. Now, if we move down to the 1-hour chart, what we see is a very good potential bullish flag forming. I don't know why this is taking a while to open up, but it will open up, and you guys are going to see the bullish flag potential and understand that now we have a mixture of what's actually going on. You see, there's the bullish flag. So based on my understanding of probabilities, what I would say is that this is more of a buy than a sell. But, and the emphasis is on the but here, ladies and gentlemen, this is a wait and trade kind of play. What I mean by that is once we see a breakout, which probably won't happen now, but could, remember that probabilities are really important here, could occur, we're going to trade either a breakout to the upside or a breakout to the downside. If we witness a fake out, what I mean by this is price action. How do we do the prediction here? Let me just find that. Is it this? Projection? Maybe. So if we see price action going, no, whatever, just leave it. So if we see price action coming like this and breaking out, let's say it comes here, uses this as a support, and start pushing upwards, starts breaking out, then of course we're going to start taking a buy position. But what if it does this? breaks out, makes a nice strong candle, and then very quickly pushes to the downside. That means we're going to cut our buy short and look for an entry to the selling side. Finding the take profit there would basically be like this. For buying, we would take the fib retracement, take the top, see that big red line, take the bottom of the bullish flag, and what we would do is we would target either 120%, the top level, which is 0% up here, or 161. So this would be our free take profit levels. For selling, we would take the same exact pattern, but this time we would target either the 30%, the 23.6, or the 0, which is 100% here. So we would get free take profit levels. Now this is reactive trading. We can't predict the markets. You can't, I can't. No guru who's using these crazy Elliott waves or whatever they're doing. Nobody can predict where the market's going to go. That's why we need to continuously review the markets. Not all the time, but have a general idea of what could happen. That is what we do at the Prime Traders community. And that is how we're going to help you become an excellent trader. I hope this lesson has provided you some kind of value. I'm sure it has. As you see, we're not taking any trade, but if we do, we are going to let our members in our community know. Thanks for watching, and I'll see you very soon.